What's up, superstars? Back with another video. You got Superstar Rob and you got Superstar Nation. How you guys doing? Oh man, beating me up every single day. Guys, I hope you're having a wonderful day today. For those of you in Canada, I hope you had a wonderful long weekend. If you haven't already, don't forget, become a superstar, smash the subscribe button, join the Superstar fam, hit the bell notification to get every single video, every single day. Also to our VIPs, thank you guys so much for your support. $2.99 a month. Start beside your name, ask your spreadsheet giveaways. Go with your thoughts on X, Instagram, Discord. Discord in the description below. Join the Discord. This is the place to be where you can meet the rest of Superstar Nation, and you could join Rich's Security Challenge. We're in week 2 right now. If you guys try Brave or Firefox, try Bitwarden, take a screenshot, go into the security chat, let Rich know you're going to get entered to win some cool prizes this week, and it will roll over into the final giveaway at the end of this challenge. So, guys, it's a great way to protect yourself while at the same time getting a chance to win something cool. And right now we are in tier 2. So tier 2 has been unlocked, which means we have over 11 entries. We're waiting to get 26 plus entrants. We need you to come in. Let's drain Rich's wallet legitimately by joining his giveaway so that he has to give away more prizes. Okay, guys, today, amazing news. First of all, I want to give a huge shout out to Superstar Kaia, who has entered into this world. Superstar Joe, congratulations. They have now brought a new beautiful baby girl into the world. You can see here, baby is sleeping nicely, and Superstar Kaia cannot wait to meet you soon. And I think this is a fantastic news for the family, fantastic news for Superstar Joe. Couldn't be more happy for the entire family, and I think that this is going to be a very, very interesting dynamic now in his household, now that he has 2 little ones running around soon, because this one's going to need a little bit of time before she can start running around. So congratulations to him, and as well to Superstar Mel, his wife, on the birth of their new baby child. Okay, so I want to talk a little bit today about recession. All right, is a recession brewing? What do you do? The markets are tanking. Like, should you buy? Should you sell? I have some opinions on this. So I was thinking about it just for my own personal finance reason. Like, what am I going to do? I have my strategies. I talked last video about one of my most basic strategies: dollar cost averaging, buying every 2 weeks. You stay invested at all times. You stay in the strategy, and you know over the long run you're going to be successful. But I have other ones. I have other strategies. Other strategies try to time the market a little bit better, and there's different indicators for that. But I always like to also use a little bit of like sense checking. You know, you want to sense check your model. If your model tells you to sell out because indicators that you have there say it's time to get out, you always want to kind of sense check it and be like, does this really make sense? So right now people are saying not at all a time to panic, right? It's just a dip. It very well may just be a dip. But I want to take this a little bit deeper, because are we sure that this is just a dip? Could this be the beginning of a recession that we haven't really seen maybe since 2008? I know the pandemic happened, but that was truly like a black swan event, which it happened fast, it happened quick. Is this going to be different? So right now, what are we seeing in the market? So the first thing that we're seeing is that there's generally poor economic data. We know that employment and manufacturing economic reports disappointed in the US. So I know we have the global sell-off right now because globally people have fears about a recession. There's also concerns about the Middle East being on the brink of a serious escalation. It could lead to more war, uncertainty. That's something that could really rock the markets. At least the markets do not like uncertainty, and the chance that the Middle East can really escalate beyond what it already has is a serious indicator for me that maybe the markets are not necessarily on an uptrend, and we're beginning to see that top. But there's more. There's some data we can do this. There's something called the SAM rule. So this is, I think, a pretty common thing. It's the SAM rule recession indicator. You could just go online and type in the SAM rule and learn a little bit about it. But I think it basically just uses unemployment data and moving averages, and it's pretty much comparing the 3-month moving average to the all-time low of unemployment. And what we're starting to see here is the unemployment starting to raise up, putting us into that recession indicator. So an early recession indicator is unemployment going up. You're starting to bottom out on your unemployment. And by bottom, I mean it's getting worse. So as it increases, people start saying, well, if people don't have jobs, they're not going to have money to buy things. And this is how recessions happen. There's also the fear that people are scared of recession and they're not going to spend money, and it becomes a self-fulfilling, I guess, cycle, right? People are like, well, I'm scared a recession is going to happen, so I'm going to save my money. Then they don't spend, and then a recession happens. So that's another consideration. But there's more. How about Warren Buffett? Remember this? It wasn't too long ago, just a day ago. He sold $3.8 billion worth of Bank of America stock in 2 weeks, and he sold Apple. So he sold some of the biggest companies he owns, and he went cash. What does that tell you? Did he sell Apple because they sell consumer products, that they're tech, and he thinks people will not have enough money to continue buying these things? They'll be needing their money for things like food and basic necessities. And how about banks? Is he selling banks because he's worried that people will not be able to pay off their debts to the bank? So did he just sell the banks by accident, or is he worried that the debt will not be able to be paid off because of a recession that it may be nearing us? There's also Japan. We all saw that Japan, I don't know if you guys have one of these apps. I have Market Watch, for example, and it sends you notifications. There's a lot of talk about Japan right now and the markets over there. Japan, my understanding from my research is that they've had really low interest rates for a long time. And what people were doing is they were loaning cheap yen, and then they were converting it to dollars and euros because they can get it at a low interest rate over there. They would do the conversion, and then they would go and invest. But they just raised their rates, and they said that they will continue to raise their rates. So now people are saying, well, I loaned money over in Japan to get the yen. I got to start covering my debts now. I got to start selling the stocks I bought and I invested in order to pay off the debt, because now rates are going to go up. It's all going to be square. It's going to eat away at my returns. I better get out now. So, I'm looking at these things and I'm saying to myself, like, maybe this isn't just one of those dips. And believe me, guys, I'm all for buying the dip. The question is, how do you know it's actually a dip? And I'm starting to wonder, based on what I just described right now. And I have another model, but this video is not about that model, because that model told me that it's time to get out of the market and go into a bear market strategy or cash. And I wanted to research it a little bit more and say, well, maybe there's some more information out there that helped me back up that idea. And you know what? After researching this and finding these things, I'm saying, maybe it is not a good idea to just add extra money and buy the dip outside of my normal strategies. Because like I mentioned in my last video, no matter what, I'm dollar cost averaging. Market goes up, market goes down, I'm buying. And I'm doing that on a reoccurring basis. And in the long run, I should be successful. However, for these other high risk strategies that I employ, I want to just back it up a little bit with some fundamentals. And I think that maybe, I'll watch closely. A lot can change, right? There could be a change in policy. We always know that the U.S. may lower interest rates, right? So just speaking out loud, even though my other model triggered selling the market, it also triggered buying intermediate bond ETFs. And if you think about it, usually when the rates come down, those ETFs tend to go up in a value. So that's just, it doesn't always go down that way, but it's something that has happened. And maybe that's why that model is kind of picking those things up. But yeah, like, this is just what I want to share with you guys, because I just want to know your thoughts. Like, this is just me just kind of researching, trying to find things out. Like, would love to know what you guys think as well. Let me know in the comments below. Love to hear your thoughts about what you guys think about the state of the economy right now and in the recession. Again, this is hot news right now. Typically, we cover NFT content and cryptocurrency kind of on the side. But I think with the markets being what they are right now, it's an interesting topic that I want to talk about. I want to get your thoughts. Let me know in the comments below. And before you leave, don't forget, become a superstar, smash the subscribe button, join the Superstar fam, hit the bell notification to get every single video, every single day. We do not miss. We here for you every single day. Also, do our VIPs, 2 Starboard side your name, ask your special giveaways, guys. Thank you so much. Take care. See you next time.